Morning traders and happy new year. Welcome back to another episode of Market in the Morning. I'm your host Kevin Dubrisky, and do we have an exciting episode? I'm so glad to have you all back. It's been a few weeks since our last episode. We have, of course, the one and only Nilabh with us today. We're going to be discussing what's going on in markets and what we can be expecting going into 2026 in terms of rate cuts and direction and general bias of the markets. So I hope you're ready for Market in the Morning because it starts right now. Yo, Nilabh, good morning, man.
What's up, Kevin? How's it going, my friend? Happy New Year's.
Happy New Year, man. Welcome. How was your weekend, man? You ready for some analysis today?
It was good. You see, the markets are already off to a crazy start to start the week.
Bro, amazing start.
Yeah.
Amazing. So
Yeah,
let's pull up your screen. Tell me a bit of what you
Absolutely.
think is going on, what you see, and
Yeah.
how are markets developing right now?
Yeah. Let's look into the high impact headlines. There's been so much that has happened in just over the weekend, and constantly back and forth that you're hearing from not only Trump and the Venezuela geopolitical tensions that are going on, but also from Fed speakers as well, right? It's setting the tone off to be a very volatile start to the year, right? As much as traders, we love volatility. There's just always some event that brings such influx of it throughout various times throughout the year, and this is just one of those events. And we're shaping into what could be a very volatile year, given that we are expecting 50 basis points of rate cuts so far for 2026 to come. So markets are going to continue to price that in. We are seeing inflation go down, the Venezuela situation as well. It is all adding to the overall narrative as well.
Yeah, there's a lot.
Just if you look at like how many high impact headlines we've just had in the past day and a bit, right? Like look at Trump just saying Cuba looks ready to fall. This is the president of the United States saying, if they don't behave, we will do a second strike on Venezuela. Right? So all of this added to the fear, uncertainty, and doubt, and market, especially gold, gapped up to start the week off. And since then, we have just been on a rally, right? And we were also mentioning that gold is still higher time frame bullish. Like markets are going to continue to price in upcoming rate cuts to start off the year, and plus the data that we get is likely going to support that. Right? When we look at data that we might have that can continue to push the narrative of upcoming rate cuts, maybe urgency to rate cuts. First, you have your labor market data, which is coming at the end of the week, and this is the first set of U.S. labor market data, which is going to heavily impact upcoming rate decision. Right. So if we look at the economic calendar, we don't have much events for today. Just some low impact news. But the main meat and potatoes is we have Joel's job openings tomorrow, right here, as well as ISM's non-manufacturing PMI, right? So their services PMI. So Joel's job openings, we have all our values over here, the minimums, the maximums, what it could come out and above. And if we exceed that, we know that we're going to get excess volatility from this jobs report, right? And of course, you can get the playbook over here. But I want to bring your attention to the next set on which we have on Friday, right? Which is the U.S. non-farm payroll plus the U.S. unemployment rate. So if we go down to Friday, January 9th, it's right over here. So NFP, they're forecasting it to be 60K, right? Previous was 64, and then a minimum of a 19,000 or maximum of 155. And we can see the playbook over here. So NFP is important because it determines if Fed cuts rates further in 2026, right? Could trigger USD volatility and rate repricing. So this is something that we got to watch out for. And then as well as unemployment rate. And I'll just open up the playbook here as well. That shapes Fed rate cut decision as well, right? Last time we saw unemployment rate ticked up, right? And it brought volatility and it really shaped the rate expectations of upcoming cuts, right? So again, it's the same playbook. If we do see that spike in unemployment, prior was 4.6. If we see a spike or a drop, it's going to short-term shift expectations or impact expectations, right? So all markets so far have been bullish to start the year. Gold, commodities is on a run, right? We also have ES, which has continued since the start of the year. We've printed a new intraday low, and we are heading back towards the 7,000s, 6,900, a higher 6,900. So we're heading back up there. Rates continue to get upcoming rate cuts continue to get priced in. So we're just going to see bulls, right? It's a good year to right now, or at least to hold your stocks, let them create new all-time highs. ES is headed up for sure, right? Even if we check out market here, let's see what market is saying. Yeah, 7,000 intraday target. Pullback short term could lead to 6,900, which could be nice buyers, where buyers jump in on the intraday time frame, right? So as you can see, it's all pointing towards, even if we look at NQ as well, highs of 26,000, right? Or pullback to 25,400. And this is because Fed 2026 rate cuts widely expected is one of the
Massive,
reasons.
dude. That gave us that whole
Right.
rally towards the end of the year last year, it was
Exactly.
April into about, I'd say, August that we were rallying based off of Trump saying, "Okay, tariff relief, tariff relief." Then markets started to, cool down a little bit. We got weak jobs, inflation seemed like it was cooling, so what do we get? We got those rate cuts, anticipation for rate cuts, and markets just kept rallying. We created 52 new all-time highs last year. So very strong market, just like Nilabh said, and going into this year, expecting now not just one rate cut, but possibly two rate cuts. Are markets pricing it in? Most likely. Are we able to take advantage of that? Yes. We're going to look for what's supporting our factors for these long positions when we're looking for the ES, right? And also gold, like Nilabh mentioned, when we have uncertainty or some type of war or something going on in the economy and the world, just like the Venezuela situation, that's going to bolster things like safe havens like gold.
Yeah, exactly. It's going to bolster safe havens like gold. Even dollar is a safe haven, so dollar gets boosted during this time, as well as Swiss franc, your Japanese yen, right?
Yep.
So, and we can see this gap is we just have continued to push up. We may see short-term retracement, even to like a 4,400 on an intraday basis, retest this area, hold this support, and we continue to ride the buys back to these highs over here, right? But we have to keep in mind that even Neil Kashkari yesterday, Fed Speaker Kashkari, and he's a voter as well, so he votes for the rate decision, right? He says job market is clearly cooling, and this was yesterday,
Yep.
right? Inflation is still too high, but he also said there's a risk the unemployment rate can pop from here, right? And these are just a little bit of clues that come to us that okay, if unemployment rate does pop from here,
Right.
then you can continue to see markets pricing in an increased expectation of upcoming rate cuts. And that's going to bring inflows into gold. It's going to bring inflows into your US equities, right? And more outflows from dollar because market's going to price in upcoming rate cuts. It's going to take demand out of the dollar, and we're going to see more risky assets get demand as well as gold as markets are going to price that
Nilabh,
in.
could you do me a favor? Pull up
Yeah.
the economic calendar. This Friday, January 9th, we do have unemployment rate. I want to take a look at that
Yeah.
and show everybody something. So what's cool with market too, guys, is it gives you a summary right here on the right-hand side, but it also gives you a historical data chart. And as traders and economists, whatever you want to call yourself, we could take advantage of this and not look at it as, oh, well, it's just a line chart, but look at it as the consistency. Has it been an uptrend? Has it been a downtrend? We see that unemployment has been on a very strong uptick, really since the beginning of, I guess, last year, February was at
Yep.
3.7.
2025
Yeah,
February.
now it's sitting at 4.6. Something I'd want to look for is can we continue that uptick on the unemployment? And something else that's cool too, guys, is you could use market to your advantage because places like Kalshi, Polymarket, you could actually bet on economic data. So you could use market to say, hey, listen, we're in an
Yeah,
uptrend.
exactly. You can look at the playbook. Yeah, exactly. And then position yourself accordingly. That's a
Yeah,
great
yeah,
point.
really cool there.
Yeah, but exactly. So this is definitely in focus. These two data events is what are really going to set the tone for the coming weeks. And then we have like CPI later this
Yep.
month, right? It all, and then next thing you know, it's already a rate decision. So these things are like clockwork. And we've seen it countless times where a data report either drives narrative for the time being until we have the next data report. Markets are always forward looking, right? So they're always looking to express volatility through one of these catalysts. And usually it's the same catalyst that happen every single month. It's a set of labor market data, it's a set of inflation data. Now, and then comes the Fed rate decision. So these just drive global liquidity. And regardless of what strategy you trade or how you trade, if you're an ICT trader, if you're supply and demand, order flow, it is just very important for you to understand that this is how liquidity moves
Exactly.
throughout our financial system. It doesn't just happen because now there's an order block here or something gets invalidated on the chart. Like this is macroeconomics. This is financial markets, the mechanism behind it. So just having a clear understanding that, okay, if this gets set, or if the markets start focusing on this scenario, this is where liquidity is going to flow. Are safe havens going to get it? Are we going to see an influence of risky assets such as S&P, right? Such as NASDAQ? So it's important to know and build these scenarios in your head, right? And that's why we also provide like the what could change this bias, right? Because if something like that starts happening, right, like if Fed Barkin speak risks
Right.
hawkish tone, then we're going to see a bit more of an outflow from gold, which is going to, in the near term, invalidate this bias, this current day trading bias for bulls, right? But if we continue to see like an escalation on military tensions, right? We continue to see markets pricing in rate cuts, then we're going to see more this bias getting supported, right? So, but I just wanted to bring up like even Kashkari's talking about inflation is slowly trending down, which means rate cuts are coming. Labor market could see more strain with unemployment rate popping off from here. So these are a little bit of clues that were being said yesterday, and then it just really ties it together to the theme of this week, which is just the first data release. Like let's get this year started. Even if unemployment rate doesn't pop off
Yeah.
right now, this data report maybe it does next month, and the Fed is expecting it. Right here, you can see Fed's expecting it. Even in Fed's summary of economic projections from earlier last year, they were expecting Q4's unemployment rate to be like 4.5, 4.6%, right? And that's what it's at. So these Fed's very forward looking and markets very forward looking as well. Like markets are always looking to price in what's to come. Right? And we always talk about this, but it's such an important concept that I think people really largely miss or don't fully understand. But when you're given data and you're given like when you start thinking in a mindset of scenarios, just like how you do in your technical analysis, when you start thinking of scenarios and what could happen in the economy and what could be set or the tone that could be used by a central banker, then you start to build these narratives that align with price action. And that's what we're building towards in market is that come January, February, you're going to see a ton of updates that really tie things together into the technicals, where all your fundamentals are blended into the technicals. And as a user, you come to market, you're like, wow, I have to use this every day because I need to know what's happening.
Yep, that's awesome. Dude, I'm excited to see these updates, guys. You should be too. I wanted to touch up on something Nilabh mentioned, how whether you're ICT trader, supply and demand, support and resistance, market makers, institutions, they're not buying because an order block is sitting there. They're buying because of this, the fundamentals, what's driving markets. Your order block works because fundamentals are allowing it. Your order block failed because fundamentals are going against it. It didn't fail because, oh, volume didn't pick up or you were too quick to take the trade or the markets are against you. Markets don't even know you're there. It's the fundamentals that will keep you in line and help confirm or deny the trade setup you're looking for. And again, we have great market key levels. You could even click what can impact us or drive us to that price.
Yeah, exactly. So it's yeah, we're just guiding you in this chaotic world of finance and economics, and especially with when you have such a volatile president like Trump who can say something. It's like you gotta know what's
Yep.
happening,
How's a
right?
Trump
You
tracker?
can't be ignorant. Exactly, you can't be ignorant to the actual mechanism behind the financial markets and just think that it's a very surface level thing. It's not. This craft demands everything that one has to exert out onto the physical world, and a part of that is learning its very core fundamentals. And I think that if you understand that, then you fully can. I think people can call themselves
100%.
day
And
traders.
again, what's great with market is it's not to learn when people hear fundamentals as a new trader, you're scared. Fundamentals sound scary. It sounds like I need to go to school for
Yeah, it's meant. They did it on purpose, just like the financial. jargons that's used and having to
Yep.
decode it, it's literally like learning a new
Yeah,
language,
but
right?
with market, it's simple. It breaks it down so basic and so simply that it's like, well, what's inflation coming in at? It's not just gonna tell you the number, it's going to give you the estimate, the range to expect, how markets are going to react if it comes in higher than expected or lower than expected. What would happen if those come in? I mean, any question you might have, you don't need to go and Google and get 4 wrong different answers. It says it right here in market for you.
Yeah, yeah. And you want to talk some
Yeah, let's break it
analysis?
down.
Let's
Let's
do
set
some
up the
analysis.
traders and viewers with some setups today.
Yeah, let's look at ES, right? So we printed this low that and remember over here we were talking about how the rate cut expectations and end of the year rally. We're going to see a continuation, and we went right back to the highs. We went straight back to the highs. We've seen a bit of an outflow to start the year, right? But that's just markets repositioning themselves in the new business quarter of the year. And just getting price action set up. But we did see a low get printed on the intraday time frame at the start of January 2nd,
Yep.
right? So we saw that low get printed. We are seeing markets hold above 6,900, which is a very key area. So it looks like with upcoming data that if we see labor market stress or any of the data reports point towards that we could continue to see market ES continue to push up as markets will price in upcoming rate cuts, right? If labor market sees any stress, markets will continue to price in those rate cuts, and we'll see inflows into ES. We'll see inflows into gold to start. Right. So yes, I'm very bullish on it. I think early this year in Q1, we will make our way through
Yeah.
7K. And 7K is not that far away. Like when you see these movements happen, like over here, this large movement happened over a course of a week,
Yep.
right? Just equivalent to that puts us well above 7K, heading up into 7,100. If we were to see another extension with ES continuing to hold this intraday bullish price action, and if we just zoom out, like we can just see we are just aching to have a catalyst that is going to drive us into the next bit of rallying,
Yep.
right? So if you have positions in your equities, like we hold, because we're going to see that break as soon as 7K gives break, we are going to see further inflows that are pretty much easily, in my opinion, going to drive us into
Yeah.
7,100.
Agreed.
And all the current factors, unless something changes, unless we see inflation pop up, which not likely to happen. You know what I mean? Inflation is trending down. We are seeing oil prices go down. It's going to have a cascading impact throughout overall other basket of good that are categories that are in the basket of goods for CPI. And Feds are going to cut. Feds are going to cut. Money's going to coming back into risky assets, and we're just going to continue to print a new all-time high. And then Trump's going to be like, "Hey, look, told you, economy's great under me. Stock market at all-time highs. I took it from 4,800 to 7K." Right, and then he's gonna win midterms like that.
He's gonna
That's
win a
what's
Nobel
gonna
Prize.
happen. Yeah,
It's gonna be crazy.
exactly. So yeah, so intraday wise, like looking at if we go back to the 1 hour chart, we can continue to see if we see 69.32 hold, a push into 69.63, right? Or a deeper pullback into any of these key levels. If we were to see around like New York Stock Exchange open, a potential liquidity move for buyers to jump in, these would be very key areas as well, right? Because sometimes you can see like on NYSE open, we'll get the drop and we'll continue to rally in the direction. But this is a very safe intraday
Yeah.
target. If you are in these intraday buys, to just hold till market comes back up to here. Also considering that we're going into a labor market intensive data week, right?
Yep, that's awesome. I have the same price targets. I'm gonna share my screen for a quick second, show you guys. I
Mhm.
was looking at the same
Absolutely.
levels on ES that Nilabh just pointed out. So here we're looking at the 30-minute time frame, and the first thing I noted was yesterday's highs, right? We rejected it overnight,
Yeah.
but if I expand that to the left, right, technicals, we've rejected this point multiple times in the past, 1, 2, almost 3, 4, 5 times. So again, our technicals lining up with our fundamentals. I'm going to look to see a break above this zone. So I'm not going to try to take it before we break it because I don't know if we're going to break it. we could reject and stay range bound, right? Using the fundamentals, we don't know. We could come back to our pullback level, 6,900 right now. But once we get that break, I'm going to look for the break, the reclaim, so use it as support, and I'm going to look to target that 6,900, even 7,000 if we could get some momentum.
Yeah, I think if we have momentum and have a catalyst, we can break through these highs at like 69.90 and just head into 7K.
Yeah.
And it's going to be one of those moments where it's like you see those, if you're in the lower time frame, you see a bunch of volatility and volume come into like 1 to 5 minute candles, and then it's just absolutely smash above those all-time highs, right?
Exactly.
To start the year. Yeah, absolutely agree. And even on gold, like gold as well, if gold from the start of the week, we continued to rally. Yesterday was the only like real pullback we had that lasted a few hours from like 5 a.m. Eastern to 8 a.m. Eastern with New York currency or right before COMEX open, right? We got a retest into 4,400. Buyers held that area, and then we've just continued to see highs being created throughout the sessions, right? So even we're just holding 44.50 right now. Like markets held that near after London Open, and we can continue to see. If we continue to see this break, like we are just headed further and further back up into these highs. If this breaks, next level is 4,500, right? 4,500 breaks, next level is like 4,525, and then it's just those highs again. But keep in mind, like gold can do something like this and still remain bullish, right? Still head on, even if we were to get some sort of outflows, even temporary outflows, like these are still valid areas for buyers to jump back in on the intraday time frame, especially since we had a round of like accumulation right over here. We saw buyers jump in initially, sellers drive price down, tap into this overall demand area at 42.75, 42.80s. We saw sharp rejection back up, and then buyers hold it, plus the tensions that popped off is just now adding towards the overall bullish bias on gold, right?
Yep.
U.S. Venezuela military tensions. We had some Ukraine strikes as well, but that doesn't really hold as much weight as the current new fresh U.S. Venezuela tensions are, right? So it's very interesting to watch as well. Like just to watch price 100, 44.25 is another one. And if you are like scalping, like a closer pullback can work out like from 44.50, but I would just be a bit wary on like you are at like a more of a weekly high at the moment. So having a pullback that could come down to maybe even like $20 down to here $30 wouldn't be out of the ordinary, like would still be confirmations for you to jump in those buys, given even if this price target like breaks a bit and we head down into like 44.20s or 4,400, it's still a buy. Like gold, in my opinion, is still, we're going to continue up to these highs over the coming weeks, and we are going to break it. Like we're going to get that break, given the same narrative that we're talking continues to get priced in.
Yeah, I'd like to see, I'm going to show you real quick on gold. Same thing, right? So market, we already had our pullback level 44.20. We have upside target 45.20. We've had extreme strength yesterday. If we looked at gold on the daily time frame, we see that yesterday was very strong and we had an increase in volume. So it's hard to look at a strong daily candle like that and go, oh, well, now we're going to reverse.
Yeah.
Like that, we're looking for continuation here. The fundamentals are lining up. Ideally, what I would like to see is either a pullback to this 30-minute area to create a higher low. So look, we're creating higher lows. Our fundamentals are bullish, higher highs. Sweep this overnight low, but still hold that higher low right here. So everybody that's too zoomed in over here gets swept out. They get out of their longs. They get into some shorts, and then markets reverse right on them. So again, just looking to trade the range, but also trading with the fundamentals. I'm buying the lows because I know that there's a lot going on in Venezuela. I know that there's a chance of now 2 rate cuts. I don't want to short the lows because I know there's a better chance that market participants are buying those lows. Same deal. If we don't come back here and we just keep making some higher lows at this point and we just keep going, then I'm just going to look for a similar trade setup as ES, a break above and a pushback higher. On, let's see, gold, 45.20. We could check market, 45.20. Look at that, guys. Perfect price target on market, lining up with the technicals, fundamentals supporting the bias. this is looking real mint today.
Yeah, yeah, and you're checking out GC, right? Yeah, gold.
Yes, sir.
Yeah, that's clean target, and similar targets on XAU USD if you're trading the CFD as well.
Yep.
So it's I would continue to hold these buys on gold if you got in on an intraday position. We are going to get back to those all-time highs. Just a matter of time. Give or take any pullbacks, because we know pullbacks are normal. Like, it is just a normal thing to have. Markets move in waves. So seeing outflows, like anytime I see these red candles coming on gold, especially when we're in such a strong bullish bias, it's just an opportunity to see where buyers are going to jump in. And if you can spot those opportunities, then you can just hold on with the current trend, and it's going to give you that ability to then hold those positions for longer. Like, you won't be, if you're a scalper, you could close majority of your position, hold the rest of it alongside the trend, right? And this will give you more experience, and also holding for like the swing targets as well.
Exactly.
So, you mind if I show you something?
Yeah, dude, of course. And then once you're done
Yeah.
with that, somebody in the chat was asking about US oil. So we'll cover crude once we're done with that.
Yeah,
Show me. What do we got?
absolutely. So, excuse me. What we were just talking about, right? Especially given unemployment rate, prior was 4.6, and the current forecast is 4.5, right? So if unemployment rate currently, if it drops to 4.5, or maybe even less, like 4.4, we'd still be within the minimum and maximum range. But what this could do is push back on the rate cut narrative for just the short term, right? And what that would end up doing is it would end up bringing a bit more outflows from gold. But even if that was to happen, Kevin, I would personally still look for gold buys
Yeah.
at certain levels. Like, let's say you saw a massive outflow to 4,400, right? I would still look to see if this level could hold, or a level down here could hold. Because gold is, again, it's just bullish, and sometimes these data reports will bring that volatility for the time given, but you may see a continuation alongside the current trend, because that's what's prevailing. Like, the overall narrative that rates cuts are coming doesn't really get changed. It's just the probabilities of when it happens gets changed and impacted. And day traders love volatility, so they being able to trade off the short-term interest rate volatility and probabilities, they're going to do it. So that's when you see the repricing happening in. When you see these pullbacks happening, is usually when there's a catalyst as well, right?
Yep.
So if unemployment rate does drop and we see a bit more of an outflow in gold, it's still, in my opinion, going to set up for a next leg of buys, intraday buys, that are going to drive us into these higher time frame highs that we have over here.
Awesome.
And yeah, so that's what I want to just talk about, because the market expectation, is that even the bank forecast is talking about unemployment rate potentially dropping 1%. So we'll check crude oil out now.
Awesome. Nilabh, the link for Market AI is marketedge.ai.
Yeah.
Awesome. Just click daily, asked in the comments for the link. I'm going to type that in the comment right now for you. Marketedge.ai. Guys, great platform. I use it every day. And again, it's sort of giving you that insight, so you don't have to sit in front of CNBC for an hour and hear what they're talking about. Everything you need to know fundamentally, what's going on in the economy, what's affecting the asset that you're trading, is going to be answered here on Market. If I'm looking at Market right now, and I'm looking at gold daily bias, what's supporting this bias? Well, German inflation undershoots forecast. I didn't know that. I don't know that until I come check Market and it helps support it, right? Gold doesn't just move off of the US Fed rate cuts. It moves off of everything that's happening in the world. So it's important for us to be able to do the analysis, do some research, and figure out what's going on and affecting it. But instead of having to do all that ourselves, Market does it for us.
Yeah, and we just got some headlines in from Fed's Mirren, another central banker. If I go down to here, Fed should cut more than 100 basis points this year. Here's another one that's really feeding into our overall narrative. And boom, market users are already reacting to it. It's a high impact headline we just got, right? Expects data to support more rate cuts. Come on, we're just talking about this. It's like they're listening to us.
Yeah,
Really,
right? They just
really.
update it right now?
Yeah. So I just wanted to bring that up. Cool. Two new headlines came out 11 minutes ago while we were just going into a bit more of the analysis. But talking about crude oil over here,
Yeah.
right? Supporting factors to current volatility and on the bullish side is U.S. Venezuela military escalations are the ones that are holding most weight, right? Trump pushes U.S. firms into Venezuelan oil, and what could change this bias is production revival potential. So, like if production was to kick up, if it was to speed up and get into full production, that's when you would see a bit more of an outflow. But currently, we are seeing that inflow off of the volatility coming from these geopolitical tensions at the current moment and the uncertainty behind it, right?
Yep.
So that's why on intraday we have these more bullish targets, and we are continuing to see from the start of the week the pullbacks, the intraday pullbacks get bought out, and markets continuing to higher price points. So now that we're also just at these highs at 58.9, if we do break above, then you would see heading up into like 59.5s, right? And that would need to break in order to head up further into there. So just keep that in mind that this is what's bringing the current volatility into crude oil. And this is what could change this. And then we would see like a reversal of that move if we saw any of these come into play, like in the near term future.
Yep. Yep. Awesome, guys. We'll do one quick rundown. I think somebody was asking for NASDAQ. What's up, Mooj? Yeah, NASDAQ analysis, please. It's my favorite. Yes, sir. NASDAQ's the best. And you know what, too, guys? It's important if you're trading the S&P to understand if NASDAQ is also trading with that trend. NASDAQ's been running into a lot more resistance lately, but because the Dow has been able to hold strength, ES has been able to be a bit more strong than the NASDAQ. But if equities, NASDAQ, AI could flip that, we're really going to see all-time highs get hit on ES.
Yeah, yeah. So Nasdaq, just like the swing target as well as the intraday target, they're both sitting at 26,000 flat, right? Nasdaq is also here. If we look at the main headline here, Nasdaq eyes 26K amid Fed 2026 rate cut, despite Venezuela tensions, right? Venezuela tensions would usually add pressure onto here, but we are seeing the Fed rate cut narrative still hold weight, as well as Mirren, who just came out saying expects data to support more rate cuts, that they should cut by more than 100 basis point. We know he's a dove. Like we know he wants. He's just a dovish guy. He has a
Bro,
very dovish tone, and it's just going to further add to this narrative of Fed and support the bias over here with this main Fed 2026 rate cuts widely expected. So that's what it's also just like how it is on ES. That's what's holding weight, just how it is on gold, plus the tensions on gold. But on US equity side, we'll continue to see bulls. First target, you would head up into these highs over here, right? Once we continue to break that, then 26K becomes much more achievable in the near term, right?
Nilabh, let's check out also on NASDAQ real quick here. Hit the little brain icon next to the NASDAQ description. And when we scroll down, that's also going to give you guys a bit of insights into the key factors. So not what's supporting and what's going against, but some key factors of what's moving right now. So the technical consolidation, sector rotation, Fed policy stance, labor market cooling. These are all just some majors that are having a bit of a impact at this time, right? And then we look for what could support, what could go against to help run with that information. Trump's Nicholas, you're funny, man. I know a lot of doves, very few hawks.
Trump's pet.
I know, I thought they were supposed to announce the next Fed chair. And I feel like they keep saying we're going to announce it this week.
No, Powell is just going to serve out his term, and then so see, Fed policy is restrictive and holding economy back. He's Trump's pet. Like this just became a hot headline as we reacted to it. So essentially, if like more than two or three people react on a market headline, a user, it becomes a popular headline that users are watching out for, which is also cool. Plus, you have the high impacting automated system engine that we have, which checks every single headline, sees if it's a high impact, if it's something traders should watch out for, and then it automatically flags it over here.
That is awesome.
Like there's been so many, especially over the past since the weekend. Like we were watching it. I was watching it over the weekend, and headlines just kept coming out. Like they always do these types of operations on the weekend to minimize the market impact, to let traders get more used to the impact, digest the impact, and then when markets open, the impact on the markets isn't always as big, right?
Right.
As let's say Trump did this during the day, during the weekday, and gold exploded, right?
Right.
Traders were buying. The impact in the markets at that moment would be way more than it is if it's on the weekend, and then the world has time to digest that information.
Yep. Yep. Awesome, guys. Great episode of Market in the Morning
Amazing.
today.
Yeah.
Killed it. Fantastic source. Let's take a quick look at our Trump headline, see if our Trump tracker shows anything today. And guys, any questions, any comments, please let us know in the chat before we wrap up today's episode. We're going to be wrapping it up in just a few minutes.
Yeah.
Definitely appreciate you all for joining. It's a fantastic platform. Nilabh, can't thank you enough for putting together such a wonderful piece of platform information.
It's a team. It's a community experience. Like the community has driven a lot of the features, the developments that we do. We meet with our users every single week. We see what's working, what's not. We experiment a lot, and there is so much that is coming to this entire dashboard over here that we are making market into the only place you need to go to have all your fundamentals and technicals into one place. Like it is supplementary. This goes perfectly with TradingView. What we do really well is take the fundamentals and blend it exactly into the charts, into the fundamental, into the technicals, so that traders can easily digest all this complex information.
Awesome, guys. Smash that like button if you learned something today. Absolutely killer episode of Market in the Morning. Again, first episode of the year.
It was a good one.
Thank you for being here.
Thanks, Kevin.
Absolutely, guys. Smash that like button. That's the end of Market in the Morning, and I will see you guys all for